Good evening, ladies and gentlemen. You're watching News Now with me, Sumita Karir, and my colleague Jude Saneth. And of course, today on the show, we begin the show by discussing the IIP numbers. Remember, India's industrial output growth has slowed in July to 6.7% from two-year highs seen in the last month. And that was due to an unfavorable base effect and slowing growth in sectors that include manufacturing, activity. And in fact, there on your television screens, you can see the numbers. Manufacturing, mining and quarrying, of course, is at, a minus 9.09%. Water supply, again, has seen a bit of a hike. And then electricity and gas, that has also moderated. In fact, to decode these numbers and the underlying trends, I'm now joined by Anita Rangan. She's the chief economist at RBL Bank. Along with Anita, joining us is also Sakshi Gupta. She's the principal economist at HDFC Bank. Thank you very much, ladies, for joining us here on ET. Now, first to you, Anita, what's really caused the moderation in IIP numbers that we're seeing? Because if we see the numbers for May, it was at 5.1%, and the overall number for June was rather good at 7.3%. But once again, it's moderated to 6.7%. What are the underlying factors?
So one thing I would say is, first, you explained like mining is a decline here, but broadly I would say that too much into read month on month, because from 7.3 to 6.7, I think it would still be a strong number, because the sectors that we are seeing actually, which was rising earlier or as a trend in the last 6 months, which is predominantly in the likes of electronics, in the likes of some electrical equipment and some intermediate goods, transport equipment like paper, rubber, these intermediate goods, those sectors are continuing to be very buoyant in terms of renewable energy, in terms of rare earth, those are continuing to remain buoyant. And the sectors that were lagging, particularly to see consumer non-durable segment, primary segment driven by base metals and so on, those sectors are continuing to lag. So in that sense, the balance continues to remain. And what we are predominantly possibly seeing is that the consumption-driven sectors are kind of seeing a slowdown. Investment-driven sectors are seeing holding up, which is also not broad-based, but possibly more driven by new age sectors like semiconducting, electronics, electrical, some cap goods driven by government capex push and so on. So it's not broad-based in investment, but consumption, where it was seeing a slowdown earlier also, that's kind of continuing. That's what I would read into the IIP numbers.
Right. Sakshi, let me come to you next. Is the big takeaway here simply the fact that these numbers could possibly be hiding weak consumer demand? I mean, let's face it, right? For sustained industrial growth, you actually need to have strong domestic consumption too. So is that necessarily not the case this time around? And is that the big takeaway here, Sakshi?
Yeah, hi, good evening. So I wouldn't necessarily extrapolate this month's IIP data to suggest that, look, there's a broader consumption, slowdown that is happening in the economy. I think it's too premature to base that on just one figure on, consumer non-durables production being lower. My understanding of this data is, I think we need to understand that there is a huge base effect that is playing out, because of which, when you are comparing the June and July numbers, you are seeing this moderation, right? Last year, if you remember, there was a surge in production in the month of July ahead of the US tariffs, right? So that's kind of also pulling down the YOY numbers. Secondly, in the month of July, there were also, oil prices and commodity prices again were a little bit volatile, because of the West Asia conflict. And I think that is playing out in the mining number that you are seeing, where there is a contraction. If I move away from these YOY numbers that are influenced by base effect, on a sequential basis, what has happened this year so far is that you've actually seen very strong, growth in IIP numbers, be it, capital goods on the consumer side, or I look at manufacturing, electricity, etc. So there's been a very strong momentum that has been there in the economy. I think for July, what I'm noticing is that some of that very, very strong momentum is definitely slowing down, which is something that we had anticipated. That going into the second quarter of this year, you might start seeing a bit of a, moderation from the very, very strong growth that we noticed in the first quarter. But all in all, I think IIP being at 6.7% definitely is not a negative number. It's not a bad number, and still continues to show that overall the industrial sector, continues to see rather healthy growth even in the month of July.
Right. So you're sounding upbeat, Sakshi, as far as these numbers are concerned versus what Anita saw. Anita was suggesting that, of course, consumer-driven sectors, they are, in fact, they are seeing a moderation in growth versus the industrial sectors. But I think mining is, one major sector that has seen month-on-month decline only. So let me ask you that question, Anita. This is weak. The numbers are weak, and in fact, they are in the negative. And that really raises questions about the breadth of industrial recovery. Would you say that?
So I think mining is not possibly an index of breadth of industrial recovery, because our industries, particularly if you see, are now becoming more and more broad-based, and in fact, government is doing a lot more to push new age kind of sectors, particularly in the nature of renewable energy. If you're seeing, there is something new that is being given for batteries, semiconductors, and so on. I think that's where the whole push is coming, especially if you see where electricity demand is coming, or where some of the export-oriented sectors are still holding up. For example, you just see the divergence. Textile is, continuing to remain very steady and buoyant, whereas wearing apparel is down. It's on a negative trend. So that's where I would kind of read that, these are export sectors are decent, but in terms of domestic consumption, there is possibly some bit of a lag. That's why you're seeing some kind of divergence in trends. But mining, particularly that, given that our energy and, energy-related production has seen some bit of, kind of shocks driven by Middle East, and there are other sectors also which are kind of seeing a drag. We've seen that in core as well, that, these kind of sectors are kind of seeing a little bit of a drag in terms of like these basic industries. So that need not be, you need not juxtapose that to industrial, because industrial is kind of still remains mixed, where you're seeing some of the capex driven sectors doing well, but some of the primary or some of the intermediate sectors are kind of lagging behind. That still gives you a mixed picture in terms of industries.
Right. Sakshi, coming back to you, what do you think are some of the big risk factors that one needs to keep an eye out for in terms of India's industrial activity and its growth is concerned? Anything that sticks out that, that needs to be kept a close eye on in terms of risks?
Right. I think number one, of course, is the West Asia issue, right? I mean, it continues to linger on, and the impact either in the mining sector, chemicals, pharma, broader input costs that could have implications for, sectors within broader manufacturing, etc. So I think that is clearly one risk. I mean, we had not anticipated earlier that this conflict will continue on for almost 6 months. So that is one risk that we're watching out for. I think on the consumption side, and to speak to a little bit on what Anita was mentioning earlier on the consumption side, I think one thing that I would watch out for is, of course, how consumer demand so far. I mean, on the rural side, I think things continue to hold up, and I think how broad monsoon picture kind of evolves from here on, even in the winter season, I think would have implications for overall consumption momentum, particularly on the rural side. So that is clearly the second risk that we would be watching out for. And third and final, I think electronics has become a very, very important sector for us, on the export side and in terms of domestic production. And there has been, globally, there are changes that are happening in regards to chip shortages, etc., because a lot of the investment is going towards AI capacity building. And therefore, whether that trend continues and leads to, some sort of, impact on domestic electronics manufacturing as well. So broadly, these three risks are something that I would look out for from a IIP, perspective going forward.
Right, Sakshi, and this is exactly what the government of India is doing. I mean, the government of India is coming up with its own domestic schemes to sort of make sure that India's electronics industry keeps up the momentum that's been seen in the past couple of months. In fact, Anita, let me come to you for just one final question. As far as these numbers are concerned, of course, there's been some moderation from the previous month, but is this sustainable, and how much further do you see these numbers to dip over the next couple of months? Because there are some risks, as Sakshi was also mentioning.
I think these numbers you may see some kind of moderation, because the second half is expected to moderate versus the first half. And also, mind you, there will be some base effects that will catch up because you're seeing a very strong transport sector emerging, largely because of the fact that post-September last year, we saw GST cuts, which led to, a lot of buying in terms of transport, cars, two-wheelers, tractors, and so on. So that momentum, you will start seeing that as a YOY base effect will start fading in the second half of the year. So that will catch up. Plus, what we may see is that the pass-through, because of the geopolitics, the pass-through in terms of higher metal prices or higher, other chemicals and all these kind of primary and intermediate products which have not been yet passed on into the final goods. If we start seeing the pass-through into the, final consumption products as well, including the durable segment, the strong strength that we are seeing in terms of consumer durables may also start to kind of moderate in the second half of the year. So that's one thing that we need to see, because again, consumption-driven sectors have been held up, holding up in some pockets, not in the others, especially what we are seeing in terms of consumer durables and so on. So that's possibly another risk that we need to watch out for, in addition to, what Sakshi pointed out in terms of El Nino, in terms of geopolitics and all of these other factors as well, and financial markets as well.
Well, lots of risks, lots of factors in general to watch out for then with regard to industrial growth itself. But on that note, we'll keep a close eye on some of those factors as they keep happening. But on that note, Anita, Sakshi, thank you so much, ladies, for joining us and breaking down some of these insights with regard to those IIP numbers. Good to have you with us here.